take a walk with us down memory lane, or maybe help spark a conversation with a loved one about the way farms used to sound. With your Amazon device or Alexa app, say, "Alexa, play country farm sounds," and escape to a mid-1900s farm where they will take a walk during morning chores.
Welcome into the Friday, November 24, 2023 installment of Market Plus. Joining us now again as we continue our discussion, Chris Robinson and Ernie Goss. Gentlemen, good to see you both.
Good to be here.
We've turned this into like a Thanksgiving tradition with the two of you. I appreciate you making time for us.
Yeah, we're proud to be your turkeys this morning.
Well, gobble, gobble. You, Mr. Goss, Dr. Goss, told me a number of years ago something that has stuck with me about the dollar. And it's going to be our first question. Tony in Nevada is going to get us started. He asks, will the weaker dollar make U.S. grain markets more attractive to foreign buyers? I seem to remember someone at this table saying a lower U.S. dollar is good for commodities. Do you still stand by that statement?
Absolutely. Other things equal, as we economists always say.
I thought it was on the other hand, and you ran out of hands.
That's right, that's right. That was President Truman said that. Give me a one-armed economist. Or one-handed economist.
He's tired of all the other hands. So will this weaker dollar, I mean, we're still, though, at high levels.
Yeah, we are. And yes, a weaker dollar is very positive for agriculture and commodities and agriculture commodity prices. So it's going to be good. But again, there are other issues. You know, as long as our interest rates, the gap between our interest rates and other interest rates, that supports the dollar, and that's what we're seeing. Now, as we talked about in the last session, we're going to see probably some downward pressure on U.S. interest rates. So that will tend to weaken the dollar a bit. But relative to other currencies, we're still going to be fairly strong.
Well, there's a country that wants to go to the U.S. dollar after an election last weekend, Chris. In Argentina, the new president has said he wants to flip to the dollar. What does that mean?
Well, we'll see. To say that, to actually get it done, there's a long road to go. First of all, it's very expensive. They'd have to come up with $50 billion because they're already $10 billion in the hole, and they owe the IMF $44 billion. So what they're trying to do is rein in inflation, because he doesn't have any faith, or whoever, with the election there, they don't have faith that their government can stop spending. That's really what it comes down to. Their inflation rate, I think, is 110%, 128%, something like that. And other countries down there have done it. I think 3 or 4 of them have done it where they've gone to the dollar. Basically, what they do is they turn over their monetary policy to the U.S. because then they can't print their own money anymore. So we'll see if they do that. I think when there's uncertainty like that, probably what will happen is the farmers that own grain that they haven't sold yet are going to hang on to it, because if you don't know how it's going to turn out, the last thing you want to do is get rid of a physical asset too soon. So I think you'll probably see them hang on to it as long as they can.
Do you anticipate, Chris, that policy change that's in the works, the presidential change that's happening, what does that do for the agriculture side of things? Because we talk about not just Brazil, but we do talk about Argentina's production.
Yes.
What does that do for a farmer in Nebraska trying to make decisions about buying or selling?
Well, Argentina's biggest, issue has been they've been in a drought for the past year and a half, so they've had problems there anyhow. Brazil's been okay, but that's been and now it's sort of flipping. That's now you've seen the drought starting to move, further towards Brazil. So if that continues to be an issue, I would say that it's something to watch, but I don't think it's that big of a deal, because again, they've been dealing with 110, 120% inflation anyhow. I think it's more of a political issue down there, because a lot of the landowners are more influential, let's say, than your average person they are here.
Do you get on the phone much about Argentina politics?
Not a lot, but it's been in the news lately. Yeah. And currency is a huge issue right now. I mean, we've got El Salvador, which sanctioned or adopted the Bitcoin as their fiat currency. We've got BRICS, which met in South Africa in August 23rd, talking about displacing the U.S. dollar as a reserve currency. In other words, the opposite. Brazil, Russia, India, China, and South Africa, BRICS, B-R-I-C-S. That's very important. we're in the U.S. We're looking at maybe we need a gold-backed currency, not this fiat currency, which is backed by just the good faith of the U.S. Treasury. And of course, as Chris is saying, we don't. Argentina, look at what's happening in the U.S. We're talking about this year. Depends on the budget that goes through Congress and signed by the president. We're talking about government spending on a deficit of maybe $2 trillion, a budget of 6 to 7. I don't know where it'll come in there, but that's really undermining the U.S. dollar. And there are a lot of folks that want to say, well, we need to look at some of the digital currencies, or we need to go back currency. So there's a lot of movement going on in the currency market. That's huge.
There's also movement in trying to buy some things. Another question that we have here is from Tim off Facebook. Do you see the farmers paying down debt or investing in the farm, machinery, infrastructure, et cetera? And I'm going to put in et cetera and write the word land.
I think if my experience after being in this business as long as I have, anytime a farmer can buy land, they'd rather buy land. Not so much with machinery, although that's an issue as well. But I think that if you're in your 30s or 40s or 50s, you've seen what happened to people that said no to buying land 15, 20 years ago. Here it is today, and they look ahead and say, if you get a chance to buy it, buy it. So I think that's the number one thing. And all of these sales we were talking about earlier, not all of them, I shouldn't say that, but a large percentage of them, they're cash sales.
Yep.
So it's not like they're borrowing the money to do it.
That's right.
You were saying in our main discussion, talking about a lot of these same factors. Are you lining up with what Chris is saying?
Absolutely. That is, we're talking about, we asked our bankers in 10 states, rural areas, project out farmland prices over the next 6 months to a year. They said flat, and it hasn't been flat. And then they come back the next month and they tell us what's actually going on, and it's pretty good growth. And as you're saying, Chris, the investments there, you look out and you saw it happened, it's going to continue. But we're seeing in, say, Iowa, northern Iowa, prices between $23,000 and $30,000 an acre. You know, and that's historically that's very high. You know.
And who's buying the land?
Well, it's bought by people. A lot of folks think it's Chinese. It's not. They may be buying some. I don't know, but it's mostly farmers next door.
And it's with cash.
Absolutely.
We're not even talking banks. So, how do you get a sense then with these bankers that you discuss of? Well, they're not even in this deal.
That's right. That's right.
So how do you get an accurate sense of then what's happening?
Well, I don't want to say they're inaccurate. I don't want to get. They know far more.
I didn't say inaccurate. I just said get an accurate. Sorry, maybe I didn't quite parse up.
I don't want to undermine my own survey, but you're right. I don't survey the farmers, and they don't survey the farmers, but they actually deal with the farmers, and I think they get a pretty good handle on it. But everyone's underestimated the price growth of farmland. I don't know anyone. I mean, my goodness, I would have bought some farmland 3 or 4 years ago. I should have bought farmland instead of that stock I bought, you know.
He must not have been listening when I said the time machine was broken.
That's right.
Right?
I see it's back there. They're working on it.
They're working on it. They're working on it. All right, Chris, I have a question about cattle on feed. Last week, let's see. This is from AJ, wants to know, the cattle on feed was neutral to slightly positive last week. Will it incentivize the funds to start building a long position in both feeders and live cattle?
Well, part of the problem, part of the big sell-off that we've had in the certainly live cattle, they were long a chunk. They're still long about 40,000 as of right now, but they were long close to 60 or 70, so they already cut a lot of that. But you got to remember, they made a ton of money. They were long for 3 years basically, so they hit the cover off the ball with that. And at the end of the day, I think there's also, if the stock market, you know, we were talking about the stock market earlier, there's a correlation between cattle and the stock market. Stock market rallied the other day, and that was another reason we saw a little bump in the cattle. Sometimes if these guys can't buy enough S&P futures, they buy live cattle futures. It's just something that happens. So I think there's a correlation there. But yeah, I think that at the end of the day, these guys are looking for another asset to hold. And, you know, if they have a reason to buy the cattle, they will. The problem is, if we keep going lower, we're at historically high prices. And then you start getting into the technicals and where is the trend this? Is that going to change? Nobody can really know. Nobody called this top, and I can tell you nobody's going to call the bottom either. That's why we hedge. You know, that's really why it is. And anybody that tells you that they know where it's going, I would take it with a grain of salt. Just hedge. If you're long the cattle, great. 10 years ago, we were excited about protecting 80-cent cattle. Now I've got guys saying, well, I'm not so sure I want to protect 140 or 170. So it's all relative. Everybody's got to make that decision. But yeah, I think the funds see an opportunity to be long, they will get long.
What do you want to jump up on and say for the last 6 months of 2023 to make sure producers here at home? This is your chance to get on the chair and yell again to those in the back.
If you learned anything from this year, it's when the price hits a good level, you've got to do something. Thinking about it or hesitating about it, you can't do it. We were north of $6 for quite a few days for corn. You had a chance. I remember going back to 2016, 17. We'd get to $4.30 for 2 days, and then it was gone. We were in that 50-cent trading range. So I think that's the takeaway. When the market gives you a good price, nobody sells the top, but make sure that you're catching the meat of that move and plan ahead for next year. Next year, you know that right now you shouldn't have a cash sale or a hedge under $5 corn for next year. For soybeans, new crop soybeans are $13 right there, a really good level. You know, you should pick a line and say, okay, I'm not going to have anything lower than $12.50. And then, boy, if we get a summer rally, if we get an issue in Brazil, that'll be great. We'll go with it. But protect, protect, protect. I think that's what 2023 taught everybody, and it was in a lot of cases, it was a hard lesson.
Dr. Goss.
Yes.
Final 6 weeks of this year, or 7, or 5, I mean. I can't count. What do you see will be the biggest story that we need to follow economically?
I think in terms, we're going to be looking at interest rates and getting used to higher interest rates. The idea that we're going to, somehow we're just going to start, interest rates are going to move lower. That's what investors are counting on. And I think as we talked about in the last session, we are going to see lower interest rates probably middle of next year. But we're going to get used to these normal interest rates. What we got used to, and as Chris said earlier, what we got used to as normal was not normal. 2008 to 2022, 2021, that was not normal. We were talking about zero interest rates, zero on the funds rate I'm speaking of. We're talking about, people were saying, where do I put my cash? Where do I put my cash? Now you can put your cash in bonds, in U.S. Treasury bonds I'm speaking of. You can put, but the idea of this free money is over. Forget it.
Here's one more idea. Favorite Thanksgiving side?
The cranberries, but the cheap ones.
Okay, and your favorite Thanksgiving side?
Deviled eggs.
Oh, that is both good. Chris Robinson, Ernie Goss, thank you so very much. Appreciate your time.
Thank you. Thanks, Paul.
Thank you.
Thanks, Chris.
Yep.
All right, thank you. Next week, we are going to look at how U.S. poultry producers are working to handle recent HPAI outbreaks. We'll also have the commodity market analysis with Arlen Suderman. Thank you so much for joining us. Have a great week.